And so to take our entry, it's a very simple process of just placing a sell stop below the most current low. In today's short tutorial, we are going to take a look at how we can trade the crude oil futures using the Mr. Bond lines. Earlier on in the year, we did make a video on how to trade and set up the Mr. Bond lines, but now I'm going to go a little bit more in depth into different strategies we can use to actually trade off the levels. Now there are many different ways we can use the Mr. Bond lines as I described in the previous video, but look for it and go watch it because it'll give you a lot of insight as to how to actually draw it, which I'm not going to cover in this video. Now I have my crude oil chart open on a 5-minute interval and I just have a volume indicator on 2. There's no need to add additional indicators unless you'd like to have maybe a 200 exponential moving average to get an idea of the longer term trend. But let's take a look first at the reversal trade. Now I'm using TradingView again like I do with most of the videos, and on TradingView we have the parallel channel that can be put up onto the chart. If you're using NinjaTrader or any other software, you can use a basic trend channel and then just calculate what 50% of that channel is and draw it in the middle as the dashed line like you see over here. Now with the reversal trade, I'll just quickly go over how we drew the parallel channels. We are looking for basically the most obvious swing high and the most obvious swing low before the volume starts picking up before the US session begins. That's going to be this area here and then this area here. I know this because if we just take a look at the volume and I take a vertical line at around 7 Central Time, this is the time at which the Americans start waking up. When we're trading the Mr. Bond line strategy, even though we can use bond lines that were plotted in previous days, we like to rather redraw bond lines every single day, and if we keep ones on the chart that we notice are quite significant, we just change the color so we know which is different from the current day's Mr. Bond lines. Now with that being said, anything on this side of our vertical purple line is going to be mostly where we're going to take our trades, and I'll show you, of course, with the bond lines as you would see in the first video. We just copy and paste our structure going downwards in this case. However, we wouldn't know where the market would go at that point, so we would also be pasting our structure going upwards. But just to keep your charts clean, you can remove them if they're not moving in that specific direction. The first one we're looking at is going to be the reversal trade. The first two sections that we drew our structure on is going to be this high over here and then this low. So of course, we aren't taking these trades. That's where we draw our structure. The first area, the first time that we see the price move into our zone is at this area over here. At this point, it's where we are going to be looking to take our long trades. Of course, you can just place a buy limit order right here if you like. But if you would like to get a little bit more confirmation, you could put your stop loss around the 50 level of the bond line and then target the next high or the 50 level up there. This is all depending on your risk tolerance. If you don't want to place your buy order directly on that line and you want to give yourself some room or at least know where to place your stop loss, you can wait for what we call the false break candle. I also did a video on the false break candlestick strategy. Take a look in our previous YouTube videos and you'll find it there. It's very useful when trading the Mr. Bond lines on the reversal system. And what we wait for with this structure is we wait for a test on the 50 line, which we get over here. Let me just draw it for us. On this candle, we touch the Mr. Bond 50 line. And what we need to see now is a breakout above this candle when we initiate our position. Now, of course, with the breakout trade, we need to give ourselves a little bit of room because the Mr. Bond lines, just like any strategy, are not going to be perfect. So we want to have some room in the trade before we get stopped out prematurely. So in a situation like this, as soon as we get a breakout of this candle, which would be on this green candle, we'd take our entry there. And then it's basically up to you where you'd like to put your stop loss and your profit target. Usually on the reversal trade, what I like to do is I like to put my stop loss about halfway distance between the next Mr. Bond 50 line, which is here. Let me mark it off. This is the next Mr. Bond 50 line. So I like to put my stop loss about 25% of the bond lines, which is halfway between these two levels here. This is telling me that, look, if price does drop to around this level, the reversal trade is not going to work. Profit targets, the first target is going to be the next Mr. Bond 50 line, and then the second target is that 50 line there. The reason that we don't really go for much more than this is because in this case we would already have a very nice risk reward ratio and a good profitable trade from there. If you really would like to, you can take half off here and then another half off at the top line, and then you can go to break even and let the trade run with you as long as you like. But with the reversal trade, because the risk reward ratio is quite tight, there's no need for us to go for extremely large profit targets. Another key note when we're doing the reversal trade on the Mr. Bond lines is that we are never taking reversals on Mr. Bond 50 lines. What I mean by that is, this is a Mr. Bond 50 line. This is a Mr. Bond 50 line. It's anything that's giving us 50% of the original structure. So another example, of course, this is a 50 line. We're never looking to take a reversal trade off of those levels, even though sometimes they will be good. The 100 lines are a lot more useful when taking the reversal trades. So any times that we're seeing tests of, there's another one over there, and over here, of course, the example that we just used, those are the levels that we look to take our reversal trades off of. Alright, so now let's move on to the breakout trade. First of all, the two differences between the breakout trade and the reversal trade is, number one, with a breakout trade, it's designed for a trader that's able to hold a position for a lot longer. So if you have only a few minutes or hours to spend behind the trading computer, then the breakout trade is most likely not going to be best for you. A trader that is able to hold longer term throughout the day and can utilize a trailing stop would actually benefit quite well from this type of strategy using the bond lines. So with that being said, there are a few things that we need to look at when we're trading the breakout trade. And the first thing is we need to see multiple tests of a specific bond line level. It doesn't matter if it's a 100 line, which is the thick lines, or it doesn't matter if it's a 50 line, which is the dash lines in the Mr. Bond setup. We need to see at least 2 to 3 tests of that specific level and then a volume breakout for us to take the trade. And I'll show you an example on the exact same day that I'm looking at now with the crude oil chart. Of course, we drew our structure using this low. There was our second test where we actually took our reversal trade. When we take the reversal trade, of course, we don't need to see multiple tests. That's not a characteristic we need to look for. But then we have our third test at this level over here. I just remove the circle so we can make it clearer. When the market has moved down into this level and we see the sell-off intensify over here, we're not going to chase any red candles or chase the potential breakout, because what I want to see first is I want to see, firstly, we've got 2 to 3 tests, which we've got. This is our third test of this line. And then the next characteristic we need to see is we need to see a volume breakout. So we're taking a trade on the specific candle that has a volume far greater than the previous few candle averages. So as an example, let me just zoom out here on the chart and we can get a better idea of it. On this specific candle right here, this red one, which you have the spinning top, we have our first candle that has a very high volume compared to the previous few. Now this is already telling me that we're looking for a very good opportunity to take a breakout here. The breakout trades are usually very high probability, but what you have to sacrifice for that then is a lot higher risk reward ratio. So instead of going for a 1-3 or a 1-4, you may have to settle for a 1-2 or even a 1-1, but the higher probability will make up for that. Once we get the volume break above a certain level, which is our average of the previous couple candlesticks, and we get 2 tests off the Mr. Bond lines, that's giving us our confirmation that we can enter. And so to take our entry, it's a very simple process of just placing a sell stop below the most current low. So even though we have the volume breakout, the volume is just telling us that there are a lot more trades coming in at this specific level. So whichever way it's going to break out, there's a high chance that it's going to be with a lot of power. Now we don't know for sure if that's going to break out to the top or the bottom, but because of the heightened volume at that specific time, we know that it's going to be quite a strong move in whichever direction it does go. The stop loss is of course going to be set at the most recent swing high, which is all the way there. And again, traders, this is completely up to you with your own risk tolerance. When we are trading, we need to not think about how to make money or how to not lose money, but we need to think about how to place the best trades possible. Imagine that at the end of the day, somebody was going to review your trades, which you should be doing, and they were going to judge you based on how well you traded, not how much money you made. If you do that, then you're going to be, instead of looking at the markets in a gambling mentality of just wanting to make money, you're going to look at the markets then of how to place the actual best trades as you possibly can. So once we take the short and the market does move with us in this case, if it does move with us and it gets to the next bond line, which is here, at this point you could decide to either go to break even, or you could just adjust it slightly. Reduce your risk over time is never a bad thing. But in most cases, I would suggest getting to break even without choking the trade too early. So once we've reached the next point in our bond line structure after this trade, which is here, I'll just make this a little bit smaller so we see exactly this point here. Once we get there, we adjust our stop loss, and then at that point we know that we are correct in the trade, and we now decide on when we're going to take our profits. When we copy and paste our structure going downwards, we can see all we're using is the Mr. Bond lines to give ourselves the profit targets. So a lot of the time in the breakout moves, it's going to be attracted to the specific bond lines, whether it's the 50 or the 100 line. So an example in this case would be you could take 50% off the trade on this bond line, and then you could say take out your entire position at that bond line. This is just one example of the many trading strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. We have funded thousands of traders since we launched in 2017. Take a look at the various testimonials, trader interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24 hours a day, 7 days a week. Track your trading performance using our advanced accounts analytics feature. Discuss trading ideas with other traders on the members area and the Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability at OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.